Hello and welcome to the Friday wrap up brought to you by David Goxstein. I'm your host, Landy, and today is May 22nd, 2026. And we're looking at Bitcoin here on the daily as we have had Bitcoin break into the actual $74,000 to $76,000 zone on the daily. And we do have a subsequent lower high that was locked in on the Friday candle. So we're going to talk a little bit more about what to look for on the daily, what to watch for on the weekly. We'll take a look at oil and we'll take a look at traditional markets. I think Monday, I'll wait till Monday and we'll take a look at gold and silver on Monday. But I think that we're just going to start right here, right now with the daily for Bitcoin. And we now have seen that Bitcoin has broken down to the next major low side structure at around that $75,000 area, in and around the 75 to 75.5 area, where the previous low prior to running to $82,500 to $83,000 was put in. And while that was a deviation of trend at the time, we saw that a little bit of exhaustion for Bitcoin's price action near the highs in a major zone of interest at that $82,500 to $83,000 up here, of course, being a monthly close open area of interest overhead as resistance. Really perfectly tagged, to be quite honest. That is a bearish retest. Bitcoin subsequently put in a lower high swing with a higher high close that subsequently led to a trend breakdown and then a lower high to lower low structure. Now we have another lower high in place. And I'm going to turn on the bands here because this is where things get interesting. And that is because we're now starting to see some initial expansion, as I've mentioned. Closing below the lower second standard deviation is expansion into the $74,000 to $76,000 zone. And I think close over close, we'll start to see, and even like mid-session, let's say, for instance, this is just as an example, if Bitcoin were to drop around $74,000 in the Saturday session, which is now open, the lower third standard deviation is going to start skating more towards that 72,000 to 72.2 area, the top side of this tighter consolidation structure, which was this lower high that was put in. Subsequently, we had the higher low, lower high trend down to retest the close open lows at 62.5 before a deviation of that tighter range at the highs. A nice run back down to, obviously, we saw that the trend change began in around that 62.5 to $65,000 area. We saw the initial deviation above the 72.2 area with a nice wick to 74, nice trend back down, and then a nice move up into $76,000 before coming all the way back down and retesting $65,000, which was this defining low side wick that I had picked out, of course, mainly because that is a prior cycle high. It also was a higher volume candle that came in and around this area relative to the very high volume candles on the actual low at 60K. So what to pay attention to here is if we do see $74,000 breakdown, can Bitcoin swing below it into some of these swings in this deviation close open right here? Sure. Around the 73.5 region. As long as it's closing back inside 75, sure, yeah, it can absolutely do that. But more importantly, if it starts to close below 74, I would look for 70,000, 70,500 on the bottom side here, which is the close open right here, to that 72 to 72.2 as the primary area of interest. Of course, opening up the next area to the downside, 68 to 69K. Right around where we had the downtrend off of $76,000 to 65, we saw the lower high that defined the area that needed to be closed above to get a trend reversal set up, confirmation off of this higher low here after hitting 65. This is going to be very important, and any kind of test of 70 to 72 is going to be very important. And I've mentioned over and over and over again, if we do see that, that's where the rubber hits the road for the bulls. I do think any kind of closes below here, Bitcoin kind of opens up the entirety of the bottom side structure here, all the way down to that 65, 62 and a half, and then eventually roping in the 58 to 60 area. And that's where things get really dangerous for longer term timeframes, because anywhere below there, we start targeting the mid 50s to low 50s, anywhere from 55 to 56 in here, with an area of interest in between there, all the way down to 52 and a half, and then potentially down to $48 to $50,000 and more. That even goes all the way down to 38.5, but not viable right now. And as long as Bitcoin is trading within the $74,000 to $76,000 area, I think that the high side structure back at 82, 80 to 82 and a half, 83, fair game. And then we kind of gauge it because there could be potentially more up to that 85 to 86, potentially 89 to 90 and more. There is some areas of interest right overhead there, 93 and a half up to 96, so on and so forth. So it's important to watch what happens over the weekend. So we've got a new Fed chair and like all that kind of stuff. And then there's a lot of speculation about rates and, all this other stuff. And then there's the kind of apathy on the timeline of, traditional markets continue to rip. And then, oil came down, Bitcoin didn't catch a bid. And realistically, it's about risk appetite. Right. What we saw was the risk appetite within traditional markets when oil did spike the other day and then eventually come back down. We're going to take a look at oil here in a second. We saw a risk rotation within markets, traditional markets, and that was, furthering the risk off in the Bitcoin area of things and cryptocurrency area of things with exceptions. Obviously, Hyperliquid was a big exception. Everybody's was really excited when it just made a new all-time high. But that's an outlier. And in this case, cryptocurrency not really catching the shine or the bid at this particular moment. And I think we need an environment where there is absolute clarity of what is going to be moving forward with regulation, bigger players, positioning and a lot of excitement around it, and more importantly, liquidity for Bitcoin to kind of and cryptocurrencies to kind of start carving out the actual macro bottoms. And I think it's going to take a while, regardless of whether you think 60K is the absolute macro low or not. I don't think there's any justification to believe that as it stands right now. It doesn't mean that it can't become a macro low area. But at this particular moment, I'm not viewing it as being able to be called just yet in that manner. Open to it becoming a macro low area over time. If that were to be the case, there's specific criteria that I need to see. Specifically, what could come into play is that we are re-entering a little bit of compression on the weekly. Granted, volatility within the bands on the weekly, but a little bit of compression. We've had a really nice retest of some major levels, right? And that's where things are interesting to potentially still see the top side being open for a run up to that at minimum 85 to 86 still available, even within, this expansion into kind of a compressive range. It's not compression yet, but it's a compressive range. And Bitcoin can really knock around in this range, to the extremes, the upper second, upper third side, lower second, lower third. And it's really about closes at that point. And right now we have the bottom side, I think by this weekend, with Bitcoin right around the basis band, we're going to see another phase of compression on the bands here on the weekly. And we're likely going to see that lower second come right into the $60,000 level area and really start to define. Right. I've mentioned this a few times that the next bigger correction on the weekly, which we could be staring at right now, if we close anything like this would be a high put in, granted a higher high within the local trend on the weekly with the higher low at 65, higher high at 82 and a half to 83, depending on your chart. And if we do begin to see a high set here, then it's all about this next bigger correction. Right? Do we get a higher low and continue on in the trend? Do we see further consolidation, or do we see a move all the way back to the downside? Now, if we do see a correction all the way back to the downside, and we specifically take out $65,000, that's where things start to look like Bitcoin's going to go for the lows, 58 to 60 initially, and then potentially mid to low 50s, all the way down to where the lower third is, and I would say 48 to 50. As I've mentioned before, and 48 being the bear market lower high. Over here, we also have the swing, the swing higher high, swing higher low over here on the weekly and monthly at right around $49,000. Running into the ETF launches just before they launch, to the big sell off to the monthly at 38.5. So all bets are off, honestly, on closes below the lower second. We're hitting mid 50s and potentially going for upper 40s to 50, right? Like that's really what you got to pay attention to. Now, what would be the criteria for setting the high here? I mean, technically speaking, as I mentioned earlier this week, this high is technically already set. Not all of your indicators, and there's a lot of indicators out there. Not all of them are going to show the weekly high is being in, but coming into this week, the weekly high was already in. Now we're back at the basis band in and around that $75,000 area. It's also a daily area of interest as well within the $74,000 to $76,000. So if we start to see this break down further, we have confluence at the lower first standard deviation. I do think that by this weekend's close for the weekly, we will see that the lower first is going to start tracking sideways. We'll likely see the lower second track up to around 60K, maybe slightly above it. And we're going to continue to see the upper first, upper second, and upper third trend down pretty hard. Likely getting, the upper third somewhere around the $97,000 to $98,000, upper second likely sliding below in the $90,000 region or right into it. And then we're going to see that we're probably going to get that upper first standard deviation start to go flat in and around the 82.5 to 83, or come down more towards the 81 to 82 level. The basis band still trending down, might start to flatten out. I don't think it's going to. I think it's going to head towards 74 on the close. I might be incorporating some projections on this based on the projected next close for the 20 simple, which is the basis band, and incorporating that into the indicator. I've been debating it. And it's just a matter of I'm not a Pine script wizard, so you'd have to bear with me to get that implemented. But I will try to do my best to implement that if I think that it is something that's viable and would be helpful. Again, it would just be a projected based on where the current candle is tick by tick, on where the next close might come in terms of forecasting where that moving average is, because the basis is a 20 simple, which would allow me to actually do a little bit of a projection on the upper first, second, and third, lower first, second, and third as well, on so that we can kind of gauge ranging to compression to expansion and stuff like that. I think this is going to set up for a little bit of a range because Bitcoin is right at the basis, and as long as we're in between the upper first on the weekly, which is right around $83,000, and the lower first, which is right around $67,000, that's going to be we're going to see the bands continue to compress. It's once we start getting away from the basis and outside of that lower second towards that, lower first towards that lower second, or up above that upper first towards that upper second, that we begin to see the etchings of expansion. When we see expanded bands like this, typically upper second, lower second act as reversals. So if we saw a sharp move down to the lows, very highly likely that we'd get an initial bounce reaction off of that. Same for the upper second, up towards 89 to 90. It's very highly likely that if we saw something like that, that we'd see an initial sell-off, and then we gauge from there, because it would be close over close above the upper second for expansion up, and close over close below the lower second for expansion down. And typically what I do is I take a look at the current week and where the lower third and the upper thirds are. So if we were, let's say, approaching the upper second, and the upper third is in the current week at $99,000 to $100,000, then that would be the next week's criteria. The prior week's upper third would become the next week's criteria for, you get above the upper second, and we're looking for a price replace band at the upper third. Same for the lower third price replace band. So if we were to see it shoot down below the lower second in like this week's candle, which I don't think is actually something to be worried about at this particular moment, never know, but then I'd be looking for a price replace band in the coming week. In this case, it'd be, 50, 48 to 50, essentially, right around, and confluent with support and resistance, right? So it's not just taking the bands, but, incorporating that with support and resistance areas of interest. Wanted to kind of point that out. Yes, we have a shorter term, local uptrend. The bigger downtrend break area would be that initial rejection at $98,000. Need to see that closed above. That changes a lot if we were to see closes above there on a close over close basis, specifically on the weekly. So I just watch it. Let's go ahead and take a look at oil. Oil has been doing much of what I talked about. And then it compressed and then started to get some bit of resolution to the downside on the daily, at least towards that lower second standard deviation, but not actually closing anywhere that would break anything. So I mentioned that when we see a compression, that we await resolution of the compression in conjunction with support and resistance levels of interest. Now, what does that mean? Oil, I mentioned, very highly likely to be volatile within the compression. It can knock around both ways. I mentioned this, last week and then this week as well, as we were coming into the compression. And in this case, we're seeing quite a tight squeeze on oil. So what is the criteria? The criteria here would be if we see kind of this zone right here between 98 and 102.5. This has been kind of a key area or inflection point locally on the daily lately, and kind of a checkpoint in lower term timeframes for me. So above, 98, I'm looking towards, $100 and then 102.5 at the basis. Anywhere above there, then I'm looking 105 to 107. If we do start to see above the 107 region, that would be expansion, right? We're starting to get expansion by that upper second standard deviation. Then it's all about 110 to 112. Looking for expansion above there, that would be expansion straight up into the 115 to 120 highs, and potentially even roping in up here to 130. And maybe even more. 140 to 150 is absolutely viable above there. To the downside, if we start to see the 90 to 95 area breached, pay very close attention to 90. Anywhere below there, and the swing lows especially, not only would I be looking for the swing lows, but on closes below here, that'd be expansion into those swing lows around the upper 80 to $90 region, so 88 to 90. Anywhere below there, we're looking for expansion down into the mid 80s, and then eventually low 80s, upper 70s, 76 to 70, 78 or so. You can rope in. I have 79 here where the swing came in on the close open. And realistically, what you'd be looking for is 90 to break down on a close, essentially. Then we'd be looking for already have seen lower prices, or if we haven't seen lower prices, we're looking for lower prices. Anywhere above, 105 to 107, especially making a close above 107 to one, excuse me, to 108 here. Looking 110 to 112, and then the expansion up into 115 to 120 to run the highs and higher on expansion. This is telling you that something is coming. I've been saying this since we went into the compression and formed the range. As we've been compressing, especially the end of last week into this week, I'm saying you need to watch this, because this is where it's very important. If we see that we get expansion back to the highs, what I would be looking for is, because we have normalizing shipping routes, so all of the different logistics have adjusted around oil to, avoid the strait, right? You've got Saudi coming out one side into the Red Sea. You've got UAE coming out into the Gulf of Oman. And what does that mean? That means that we're getting, we can look at upside moves where there is no tangible effect on supply side, meaning that UAE and Saudi pipes, infrastructure, ports, and that kind of stuff are safe if there is any kind of kinetic conflict that kicks off again, as temporary and not resetting the floor higher for sustained higher prices. Whereas if we do see upside price action, and we see in conjunction with that damage to infrastructure, ports, and the rest in the Gulf region, we're probably looking at a sustained and sticky move to the upside that resets the floors higher. And to the downside, I think that a fast move down on expansion, great, but that's going to probably get some nice mean reversion back to the upside. We would need to see stabilized compressions at lows that continue to push lower or re-expand lower for sustained downside, and the floor to be reset lower for oil. So definitely pay attention to oil. If oil does spike the highs, I think we see a risk-off rotation across all capital markets. I think we see a risk-off rotation within crypto. What does that mean? That means that traditional markets likely going to head to the downside. They've been really resilient during this entire phase. Now, the one thing that does give me pause it is this expansion on Dow. We got the expansion on Dow that I talked about. We hit 50,830, and I would just watch it very closely, because this could easily reverse it right back and run the other way upon initial expansion. I like to see close over close expansion after meeting the criteria, in this case, of breaking the all-time high. And we would just have to await, any kind of, if there is some sort of a spike in oil, if this causes this to avoid a close over close expansion, or if, meaning that, this opens on Tuesday, and then reverses down, that would be, that would not be a valid expansive posture. Doesn't mean that it couldn't end in the result of upside expansion. We would just have to carefully watch, these supports to the downside, in particular right around the 49.5 to 49.6 level. You wouldn't really want to see it taken out the low side structure that it just put in around the low 49K region, and then running the other side of expansion, because if it breaks through the lows, that's expansion much lower to go and do gap fills that we've talked about prior. But definitely pay attention to it, right? Because we did see oil slide into the 90 to 95 zone of interest, but bounce off of it. And then we got, the initial profit taking rejection at the highs, but did close a new all-time high. The same cannot be said for the look on NASDAQ or SPY. So we did get a run back to the highs. And I maintain that above the upper first on closes at 29.5, we're going to see that this still has the opportunity to not only run the all-time high and higher, in this case to this 29,680 to 30K, 30,250, 30,300 is well within the cards. But if we start to lose the 29.4 to 5 region, probably very quickly back to 29 and under, down to the basis band here towards 28.5. Anywhere under there, we're looking for this to slide down towards the upper 27s, 28K for some gap fills around 27,750 to 28K, fair game, all in here for these gap fills, and then potentially more even down into the low 27K region, and 27.3. On the bottom side of this, it's 26,877. So basically 26.9 to 27.3. You can call it a happy medium of around 27K. To the upside, though, as long as it's closing above 29.4 to 5, it's still preserves the chance to not only run the all-time high but higher. SPY, same deal. Above around 7, I would say, honestly, this is going to open with the upper first, probably right on the low of the Friday session, which is, I would call it, it's 744.50. You can call it 745. If it's lost, beware. 735 to 730 is well within the cards to the downside by the basis. Gap fill down to the 720 to 728 region is fair game. That's where the lower first is. And then, it's all about watching 715. If 715 is lost, we're probably looking at this sliding all the way back towards, the 705 to 710 region and potentially on really, really strong moves. I'll be honest, at 710, I think we would probably get a bounce, lower seconds right there. But if it did slide through, lower thirds coming right in at that 690 to 695 on a really, really severe sell-off. And I would just really watch oil. I mean, I know I've been a broken record in this regard, but just watch oil. And keep an eye on if things do move back into a kinetic phase in the Middle East region on confirmed, because speculative plays are always going to be going on in the market, right? It's all speculation. But I'd be looking for key things in terms of news coming out of anything if it does kick off again, would be if there is any infrastructure damage to the Gulf states, right? Not Iran. Okay, Iran is not a player when it comes to what we're looking at for pricing of oil. I'd be looking at, in particular, Saudi Arabia and UAE. And then this kind of ropes in that we know that Saudi Arabia and the UAE did strikes in Iran as well prior. So likely, if something kicks off again, their infrastructure is fully on the table for the elements of Iran's IRGC and military forces. So keep that in mind. So it's something to watch for if we do see that, because that would reset the floor higher if there is any kind of damage to any of that infrastructure, because that just further puts the squeeze on the supply side of things. And demand, although demand destruction is in play in Europe and Asia, it is not. It would need much further demand destruction in those areas. Let's put it that way. Pretty bad situation if we saw that happen. And regardless of what your take is about the United States and the deals for the United States, energy in terms of oil and natural gas, which is, top producer in the world and moving into the top exporter spot and all that kind of stuff. It just deepens the pain. Right, because then it takes off, it's just that much longer to get ships over here to the United States. For those of us in the United States that are here, I'm talking to you, it takes a long time for those ships to come over and then go back, which deepens the supply crunch in Europe and Asia, which would lead to a reset of the floor price for oil higher, potentially much higher. And Iran knows this. So from a strategic point of view and a historical point of view, Iran's got a bone to pick with Saudi Arabia in particular when it comes to oil. And with the UAE exit of OPEC and the amount of strikes that they had already put up with out of Iran's regime, you can almost guarantee that their infrastructure would be targeted. I'm not saying it's a foregone conclusion that it would be targeted. So that's what you need to watch for as it relates to the pricing of oil. So fast, false move if no infrastructure is damaged, and a painful resetting of the floor higher on a move higher in oil where infrastructure is damaged. So, and that would lead to, in my opinion, a risk-off rotation. And I think that United States markets are in a perfect position to actually get a deeper correction and be just fine on longer-term timeframes like the weekly and continue to melt up. And that would be, from demand destruction in Europe and Asia and capital flight to the United States markets. So there is some dynamics at play there. But I can tell you one big thing is that the way that cryptocurrencies and Bitcoin in particular, leading the way for cryptocurrencies, would likely take an outsized hit in an environment like that. And then it's all about the relative strength of like Bitcoin in an environment like that. And then cryptocurrencies by virtue of that fact, because typically, they like to move with Bitcoin. All right. You have a wonderful weekend, a wonderful morning, afternoon, and evening, no matter where you are. I hope that that you get a chance to go and honor the fallen on Memorial Day, and yeah, I really appreciate everybody that that shows me support here on these videos and in the various spaces and the content and shows that I'm on, and yeah, a big thank you to all of you again. I really do enjoy the discourse that we have going on around what it is that we're looking at and how we're looking at things. And even when we disagree on where things might be headed in some of the longer term, I think that it's a really good conversation has been happening. I've been having a lot of great conversations with you all. And more importantly, some of you are just giving banger tickers out there for the various markets. So I really do appreciate the support. Please like and share this out there if you did find this information helpful, and if you enjoyed it. And with all of that being said, Landy out. Take care. Have a great extended weekend. Oh yeah, I'll be back here on Monday. I'm still going to record a video.